Hello, everyone. This is on the Inia Desnia show, the Dr. Inia Desnia show. I know I've not been around for 2 weeks, 2 episodes, but I remember I told you guys that I'll be on vacation all the time. And I think if you've not been on vacation or you have not taken time off, please just, spend some time to relax. So it was really nice. So went around, visited family, did some sightseeing and had a good time. So now I'm back. So, I mean, who will believe it? Already almost done, right? Or weeks, it depends on where you're at. Some people that have kids going back to school, we still have a couple of weeks. So please go out there and have some fun. All right. So again, this is Dr. Inia, the Dr. Inia Desnia show, and you're welcome. And greetings to everyone that has watched, support, and also missed me, but I missed all of you. But you know what? Okay, let me not say I missed all of you because I really enjoyed my rest time. So yes. So right now I'm back. Okay, so remember this platform, just to let anybody know that hasn't been here before, that this platform is just a platform where I share ideas, share tips, answer questions. Here and there we have guests that appear, guests on both sides. One would be guests that the one group would be guests that have questions and want to appear live. The other group will be people that are experts in impact small businesses that are actually say, you know what, they should come forward and also share something that will impact, small businesses, medium-sized enterprises positively, right? So wherever you are around the globe, it's usually I do my best to make sure that I share topics that will, that matter, when you're a small business or a medium-sized enterprise, right? So, so that's what we do, or that's what I do. And anyone that's on this platform, we try to do that, and we do our best. All right. All right. So today I have another interesting topic, and I've just been talking about summer. Okay. So today I'm actually talking about summer tips. Summer IRS tax tips. Now, I know that, as I said, that I usually try to share, topics that affect anyone worldwide, but again, I'm talking about topics right now, summertime IRS topics. But, I'm sure wherever you are, there are topics that really impact the taxes, impact so many areas of your lives during the summertime, all right? And if you're have multinational, you're a small business, but you have clients around, you're small and medium-sized enterprises might have clients that are outside their state. So it doesn't mean that you're a large company. Not only large companies, not only conglomerates and multinationals have clients that are outside their state or their geographical location, right? Because the internet has made the world smaller. That's what I always say. Internet has made the world smaller. All right. So a few tax tips. Now, many, of course, most people that own small and medium-sized enterprise, of course, they do file their taxes also, right? So some businesses here in the US, or, depends on where you are, it could be in some other countries, some businesses actually flow through into the owner's return. It depends on if you're a pass-through. There are businesses here that are pass-throughs, like sole proprietorships, partnerships, S corporations. They are pass-through entities, meaning that you don't pay the taxes at the entity level. You pay taxes at the individual, the owner's level. All right. That's what we say when we say pass through. All right. Or when I'm saying pass through. All right. So I'm just going to give you general tax tips or general tips. Some of them might not be taxed. Some of them might be taxed. But some of them might not be taxed, but eventually will affect your tax. Okay. So the very first one I would say is, a lot of people, a lot of business owners are getting married during this time. There are a lot of people that are tying the knot, and you might say, yeah, yes, it's blissful, it's great, awesome. But, there are some things you need to do to make sure that now that you're married, that there are some changes, right, that you have that have to be put in effect. You need to make sure that, you inform the Social Security, SSA, Social Security, organization. Let them know that, okay, yes, the government, so it's not organization, it's the government, Social Security. Let them know that now that you guys are now a married couple, the names are changing. Make sure that that is reflected, because of course, when you're filing your tax return, you could file as a married couple now. And I always advise people, unless you cannot, unless you choose not to. There are various reasons. Now, I'll give you a couple of reasons why people choose not to file married filing jointly, because there are so many advantages filing your return with your spouse, right? You're a business owner, right? You're filing because everybody, as a business owner, you still have to file your individual tax returns. Now, I always tell people, if you're married, file as married filing jointly. MFJ, that is that's what you should file. But things happen, right? Maybe your spouse has a big tax debt even before they got married to you. A lot of people say, you know what, still file separately, which is now the person is married. Remember, it's not single anymore. After marriage is you can actually choose to either or, married filing separately or married filing jointly. Those are the only two you can file. Only two status you can file. You cannot file head of household because you're now married. You cannot file with widower. Of course, you're not a widower, so of course we're excited. Everybody's excited, and the person is, you're married now. So if a lot of times people might say, you know what, I have a big tax debt, right? And because of that, because that there's a big tax debt, because of that, the husband or the wife might say, you know what, I'm not going to file with you because of this, even though there are many benefits as married filing jointly. All right. Then, so just note that. Okay. So that's one of the things that, if you're one of those that tie the knot during this summer, congratulations. But you know what? Now it's time to sit back and make sure you put all those things in. If you're changing your name, make sure that takes effect before the tax filing season. All right. Now, some people, remember, we're talking about some of the things, some of the items or some summertime tips, and this, of course, is based on the IRS. So now there are some times that business owners have dependents, right? Have that go to, right? So it's important for you as a business owner to see if if those expenses qualify as a deduction, right? It's not unlike your child to private school with the section 529. We have a different explanation for that, but that's not what I'm talking about. Usually, if you send, there's some the rule, and that's why you want to have a consultation. Very fine, but this is just for information purposes only. Check with if all the expenses you made for you if you have a child, because generally, as I said, this platform is to make sure that as a business owner, you also thrive, right? And also your business thrives, because the business has to go through it's being successful for you to thrive. So even you have to find out what affects the business owner. Now, if you have a child and the child has gone for camp or anything like that, right? Just check if that camp qualifies, right? It's different from during the school year, right? But if it's during, there are specific conditions. So again, make sure, because during the summer, many kids go for programs. So make sure, find out if that qualifies. You have to, it's just a platform for you to know that it might qualify. All right. So that's one of the things that you should recognize. Now, another thing that you should recognize as a business owner that a lot of people do this. They actually hire during the summer. Depends on the kind of business you do. You might hire during the summer. And that's not a bad idea, because a lot of times, many students are out break, are on summer break, so they are looking for jobs. So if you do hire someone during the summer, let's say maybe you have, depending on your business, maybe your business is actually very, you have volume. There are some businesses during Christmas that has volume, right? Some people during summer, volume, you have a lot of, you need people to work, right, in your business. It just depends on what you do. Now, you have to understand that when you're hiring this worker, you might say, but it's just for the summer. Ensure you're classifying that worker correctly. All right. I know I've mentioned it several times here and there that is important for you to note if this worker is an independent employee or not independent employee. I meant to say independent contractor, right? An employee and an independent contractor, they are treated differently for tax purposes. Now, if you do hire someone and treat the person as an independent contractor when the person is actually an employee, there are penalties and interest and all kinds of stuff that you don't really want to get into. You don't want that to impact you. Okay. So it's very important for you to understand and ask yourself and make sure, not ask yourself, you make sure, right, that the person you're employing or the worker you're bringing on, even though it's for a short period of time, you make sure that you ask yourself, is the person an independent contractor, an employee? Now, if the person meets the criteria for an independent contractor, please go ahead and classify that person as an independent contractor. There are so many factors to consider. But you know what people say? A lot of business owners say that, you know what, it's better safe than sorry. I hope you know what that means, right? Better safe than sorry. It's better for me to say, okay, you know what, I'm going to do an employee as opposed to, hiring that person as an independent contractor because of one thing or the other. All right. Because when I say one thing or the other, because if you're not sure of that person and you do of that person, maybe you're not sure, oh, is the person an employee or an independent contractor? You put the person as an independent contractor, IRS finds out that the person was an employee, that becomes an issue, right? The person is supposed to be an employee, that becomes an issue. That's why a lot of people, know what, is better safe than sorry, okay? So again, if you're sure that person is an independent contractor, and go ahead. Because, the great thing about an independent contractor or hiring an independent contractor is that you don't pay employee taxes. You don't pay those taxes for the employees. So a lot of people go that route because they said, I don't want to pay those taxes, but it's not up to you, right? If that worker does not meet that criteria of being an independent contractor, then you know what will happen? Then you would have to pay penalties and, there'll be interest involved. And guess what? You still have to pay those payroll taxes. All right. So yes, you're hiring summer employees, hiring interns. Hiring people that work with your company, or that as you're doing this, make sure that you are properly classifying these workers. Okay. So another summertime tip is, a lot of people, even in the offices, you might think of spring cleaning only in your homes, right? Well, offices do spring cleaning. They bring out things and because again, it depends on your business. Some people are not that busy during the summer. Yes, it's possible. But whether you're busy or not, and people think of sorting out things that they don't need within the office, even in their homes, right? Because a business owner, of course, will have a home and you're just sorting out things that they don't need and they want to donate, right? Now, it's important that, right, you make sure, that donating, make sure that as a business owner, if you have to donate, right, take advantage of that benefit, make sure you get the donation make sure needed, right? Properly donated, get your donation receipt. Because a lot of times, people feel that, okay, somebody might have too many computers in their office. There are people that actually will take that off your hands, right? Instead of you just disposing them, right? People will take it off your hands. There are many places that they have activities that you might want to give those computers to. That's an example. All right. Now, in addition to donating property, right? Like I said, I gave the example of office computers. What about your time? A lot of organizations this summer, they volunteer. They do a lot of volunteering, right? And that's something that a lot of organizations do. So if you're into that, or if you're not even into that and you want to start, please go ahead, right? Now, one thing that I want us to know is that when you're donating your time, you cannot, there's no cost, you cannot deduct time donated, right? But you can deduct the transport, your travel time. Your company says, you know what, I want to go and feed at the shelter. You want to go and do something like maybe go and, go to a senior's home to do something, time. There are so many ways to donate your time. That time, is not deductible, right? But when I say your time is not deductible, I mean, some people take it as still work time. That's fine. You take it as work time. That's fine. That means it's still paid as salary, right? That's okay. You just, it's part of the salary, so that's fine. But also the mileage, right? The mileage. Now, if you're self-employed, right, you can't take time and say that this is my time I spent to work in the in the elders home, seniors homes, right? You can't take a deduction for that. You can't take a deduction for that time, okay? So a lot of people, what they do is that it's part of their work. They said, okay, you work 40, maybe how many hours a month, that about that 40 hours, or let's say 40 times, let's say 160 hours for a 4-week period. It's okay, that you can use 10 hours and volunteer. That's what some companies do, right? The mileage that you drive towards that, to that volunteering, to that place that you volunteer, is actually tax deductible. All right. So it's something that a lot of, you give back to the community, and a lot of people have those programs, especially during the summer. So it's very important for you to realize that and recognize that. Okay. And then another point, I mean, there are several, but I'm just going to highlight some of them. Another point you might want to look at is your withholdings, right? If you're salary staff, this is a time for you to look at your withholdings. Now, a lot of times, even those that are into SMEs, some of them have something on the side that they do. Some of them, there are various things that they do on the side. Because we're talking at a couple of minutes ago, I was talking about hiring summer interns, right? Now, there are some owners, business owners, that actually do other work during the summer. I'm not talking about volunteering. Maybe they do projects. Somebody can ask them that, a project, and that project, the company that hires them to come and do that project. I'm talking about the business owner now. The company that hires them to do the project says, you know what, I know that you're coming from your company, but because we want to be okay with this summer hiring of this business owner, your summer hiring, we're not going to do it. We're not going to take it as a 1099. We're not going to pay you as a company. We don't want to do that. We want to pay you as an employee. We want to pay you because we've had issues before. We don't want to take chances. So if you're in that boat, like having extra additional income that you get a W-2 in addition to your company's, let's say your company is a K1, you also are paid a salary, it's important for you to look at your withholdings, right? Analyze your withholding and see, okay, am I really taking up a lot of my my salary is like, am I taking up a lot of withholding from my salary, right? Not just, not. And so at the end of the day, you get a surprise check, tax bill, right? Tax is not, I won't say tax check, because you are the one that has to pay the tax. So you have the tax check to pay. But let's say you get a surprise tax bill. All right. So you don't want to do that. You don't want to be in that boat. In that you are, you're going through that. All right. You don't want to get a surprise tax bill because you've not done your analysis. All right. You've not sat down and looked at your withholdings. All right. And then in addition to that, if you are now that you also, I mean, as I remember, the first point I mentioned is marital tax. Marital tax issues, right? Well, change name and married filing jointly. It's very important. Let's say, you get married, go to your honeymoon, fantastic. It's very important for you to sit down with your spouse, and say, okay, let's look at this. Let's look at how much we are withholding. Let's look at how much we, have, and make sure that we're really withholding properly, right? We have enough money that we're withholding. Like, so make sure that because now it's going to be married filing jointly now. So make sure that, if you're not in that category of just getting married, that's different. But even if, well, I won't say that's different, because there are two situations here. Married filing jointly, just got married, look at everything. How will it affect you and your spouse? You look at, okay, are we doing the right withholdings? That's one. But how about if both of you, something, maybe your spouse changed jobs, right? The person got a new job, and this is the time to look at withholding. If the person withhold enough, is your spouse withholding enough? What I just said about you having an extra project, you have your business, but you have an extra project where this is expertise, but I'm not going to pay your company. I want you to do it for me as an individual, where I'm going to pay you a salary for the weeks or this few weeks you're going to be with us, right? Just maybe you have some time during the summer. So you have to go back and say, okay, you know what? Let me look at my withholdings. What am I seeing within my withholdings? All right. So that thing to look at when it comes to analyzing and checking things up, right? Checking things out. Another area you should look at is your 401k or your retirement plans. It's very important. Constantly check that maybe that everything is okay with that. Check if you need to increase that, if you're maybe below a certain threshold. Check the policy and check maybe your company policy, right? And see if there's some changes that need to be done, or you talk to your administrator, because small and medium-sized enterprise, of course, that you're entitled to have a 401k within the company, because you're entitled to have a 401k within the company. All right. So it's something that if you don't have it already, this might be something that this is even beyond the summer. It might not actually be a 401k, it might be a SEP, it might be, there's different plans, right? I'm not a financial advisor here, but I'm looking at the tax side. All right. So I'm going to tell you about the exact one you need, because right now I'm just giving you the information. Usually what happens is that a financial advisor looks at your objectives before they say, okay, this is the way to go. This is the way not to go, right? But it's very important for you to look at your withholdings, look at your retirement plans, make sure that there's enough money, that you're withholding enough money, and make sure you're really enjoying all the benefits, right? When the benefits means that, assuming that you are not in the right plan, right? You have to keep your financial advisor up abreast, or make sure that the financial advisor knows what's happening in your life. Maybe there's some changes you want to make sure that is really discussed, and you're transparent with your financial advisor, right? I know I'm talking about summertime tips, but it goes beyond the summertime. But I just decided to just highlight these because, of course, many of these things happen during the summertime, right? But it doesn't mean that, you should not sit back and some of these issues beyond the summer. I know the vacation one, when I talk about the summer interns, I know that was specific summer, but even people marry beyond the summer. So it just depends. All right. So it's very important for you to also note your withholdings. All right. I believe that that's really it. Let me see if there's anyone else I can okay. Another thing I want to also add is when you're looking at refinancing, a lot of times that you might be looking at refinancing, whether you're in your maybe you're a pass-through entity. A lot of times, a lot of from their homes, right? Some business from their homes. Really look into that because there are thresholds right now. So make sure that those thresholds are applicable. Make sure that that's because again, you might be operating from home. All right. So make that when I say operating, I'm talking about business, okay? Business operations from home. All right. So just make sure that these are some of the tips that you can look at. Of course, as I said, there are so many out there. What I usually do is during before the end of the year, maybe around November, I meet with my clients and really look through some of the tax laws that have been in some of the legislature have maybe enacted or promulgated not too long, maybe during the year. And I make sure my clients have taken advantage of those legislature because, it goes beyond the summertime, right? It's very important. I always tell clients, do not wait till April, which is the deadline. Well, of course, there's extension, but usually if you're an annual tax filer, it means that by December 31st, you have to implement, or before, I don't wait till December 31st. Before December 31st, you have to implement so many things to make sure that you get the benefit of that year, right? I know that there's some retirement plans that allows you to extend it to the first, I believe, I think it's around February 15th or so. There's a date that it allows you contribute up to but then for it to still apply in the previous year, right? So let's say this is 2023, you can still contribute. I'm not sure, but I know it's by the first quarter. There's specific dates that you still contribute at that date, on that date, and it says, okay, you're fine as long as you contribute to a retirement plan. It depends on the plan. By that time, you still can. That is for the previous year. All right. So it's very important for you to keep up to date with some of these things because, again, let it not be that April 15th, you say, oh my goodness, I didn't know. I didn't get that benefit for the previous year. All right. All right. Okay. So these are some of the summer tips that you should take note. And of course, as I said, ongoing, make sure that, of course, again, it's not exhaustive. Make sure you take advantage of them. And of course, as I said, we're always here. I've said this before. If you don't have an accountant or a tax practitioner you're working with, it's important for you to reach out to one. I mean, we're here. I mean, I'm here. Of course, you have my contact information, but it's good to reach out. If you have someone you're working with, ask them about, okay, what about this? What about that? I mean, is anything new? And it's very important for you to take advantage of tax planning before the end of the year. All right? Awesome. Okay, so let's to our questions. No guests. I'm just getting back. I'm going to get the guests rolling again, but right now, no guests. I'm just happy to be back. So let's go to some of the questions for today. The first question is, I'm planning to rent my property to my business. Is this allowed? Rent my property to my business. Is this allowed? Now, yes, it's allowed, but there's some issues there. right? There's some issues there. Now, I'm not talking about home office now. We're not talking about home office. I'm talking about people that have buildings, have property, and say, you know what, I have property, buildings, and they say, I want to rent my property, like I want to lease or rent my property with the business. Okay. Now, that's seen as self-rental, is allowed, self-rental. But there are some issues there. Self-rental, the Internal Revenue Service says, or the law, the tax law says, again, I'm not an attorney, but my background is a master's in tax law, so I understand when we look at the Internal Revenue Code. So what happens is that if you rent your property, your building, your property, when I'm talking about your building or your to your business, and you materially participate, that means you're actively involved in the business. Now, I don't want to break down, about materially participating, need to work and things like that. But the issue here is that what happens is that when you rent your property to the business, when you rent to a property to a business where you materially participate, what happens is that the business, the rent, that rents, right, is non-passive income, right? Right? Rent is non-passive income, right? The profit is non-passive income, but the loss is passive loss. Okay. Now, you might not understand the technicality, but just know that it means that profit, you'll be taxed. But loss, loss, if you think of when something is non-passive, right, or is passive, it means that you're not actively participating in that thing. Maybe it's get dividend. You're not usually, if you get dividend, if you're like get income that you're not actively participating in that business, those are seen as passive, right? It depends on if you're not actively participating, right? Passive. What happens is that passive loss only is only passive income that can deduct passive losses. Okay, you can deduct passive losses from passive income, right? But remember, in this case, this is non-passive income, right? So there are a lot of technicalities. I'm not going to go into that so deeply, but I just say that yes, you can rent your property, your building to your business. Yes, you can do that, right? You can do that, is allowed, but there are some issues there, right? It's not that it's illegal, but it's allowed. But make sure that you also rent at fair market value. Don't rent at a value that, you have a building in downtown somewhere, and you're renting it to yourself, or sorry, to your company at a very ridiculous rate. You know what I mean? Below the market, that buildings that at that amount, right? So that is one of the issues, right? So make sure it's fair market value, the market rate, prevailing market rate. Okay. Now there's a way. This is beyond the scope of this question. So if you, of course, want details, you can consult on that, or you can talk to your own accountant. Okay. But you are allowed. All right. So the second question is, ahead of the 14-day rule for renting your personal property, please explain. Okay. Yes. There, one thing about tax law, there's somewhere, somehow, there's sometimes, not always, there's some areas that you can get some advantages if right? Now, the rule here is that, and this is even this is summer, right? So a lot of times this might apply. Of course, it might apply other times, right? So now, if you have a property, right? And you rent your property to your business less than 14 days, right? That for less than 14 days or less, that rental income is not taxable, okay? So that is the 14-day rule. So people that have vacation homes, what happens? They might say, okay, you know what? My business will go and do a retreat in that vacation home, and it will be less than a couple of, maybe a week, or less than 14 days. What happens is that the company will pay for the use of the property, right? So that income that you receive as the owner of the property is not taxable as long as the rent is for the business. The business rented the property for what? 14 days or less. All right. So that is great news. So I'm not talking about 15 days. I said 14 or less. So, you have to be careful and you have to document. Documentation is very important, right? So again, that rent is not taxable, right? So that is the 14-day rule. So a lot of people take advantage of this during the holiday season, summer. They do it during the Christmas season. They do Christmas parties, maybe a week, things like that. All right. So that's allowed. Okay. So the third question is I want to travel with my family for business. Are summer vacations tax deductible if I also travel for business? Well, first of all, let me get this. I think you're saying that you want to travel for travel with your family for summer, and your family okay, maybe let me break this down. If your family are part of your business, if you have people, your family, they're working in your business, right? And you want to travel for business, right? You want to travel for, let's say you have a family business, all of them are working for maybe you have 2 kids, 3 kids, they're all working for your business, and you guys want to travel for a business trip. Let's say it happens to be during the summer. You want to travel for a business trip. Maybe you're in the US, you want to go, let's say, to Italy, and maybe you want to go, maybe there's a conference you guys want to attend, and you want to use that as a vacation. Well, that trip, going to Italy for the business, for your family members that work for your business, that is deductible. Now, if the trip to Italy, let's say it's for a conference, let's say it's for a conference, and the conference is for 2 weeks. Okay, let's say for 1 week, and you stay there for 2 weeks. Now, the hotel bill for the 1 week of the conference is deductible. The flight for the conference is deductible because of course, you have documentation, that's deductible. All those are deductible, but the extra 1 week you stay and say you want to have the fine time and everything, that extra 1 week, that week is not, that expense is not deductible. Okay, that expense is not deductible, that 1 week. Okay, so that, remember I said your family works for you. Now, if it's like you are the only one that is, let's say you are the one that works, of course, you're the business owner, you're going for this conference, and you are the only one that works for your company. You want to pick up your wife, your kids, right? Let's say like that, maybe, or the other way, you're the wife, you want to pick up your husband and your children, and they want to come for the business trip. Now, the tickets, remember, you're the business owner, and your family, nobody works for your business, right? That your ticket is deductible. Your family's ticket to Italy, not deductible. Now, if you guys stay in one room, maybe because there are some rooms that are like suites, and you all stay in that room, fine. Of course, you can justify that you wanted to stay there, it's deductible. But of course, your business, your 1 week cannot be extravagant. You cannot have a bill that is so outrageous, right? But if it's like your kids are in another room, and the room you stay in is deductible. The room your family, your kids staying, maybe they're staying with maybe a nanny or something like that, that room is not deductible. Remember, we're talking about a business trip, right? Now, if you are any other, like anything that's outside the business, like I said, your nanny or your kids, fine, those are not deductible. But for you, right, it's deductible for the business. All right. So yes, it's good to go for your business trip. But I just wanted to make sure you understand that it just depends. Everything must be business related. Okay. All right. So make sure we know that. So everything must be business related. I always tell people there's nothing wrong with having your family travel with you. If you want to get a course or a conference in Italy, there's nothing wrong with you going for that course or conference or I mean, if you want to take your family, know that this that pertain to your family is not deductible. I know people that they go for the conference and then their family flies in and joins them for the week of maybe the second week. I've heard cases like that because during the during the conference, the dad or the mom, they don't have time. So there's no need for them to come that time. So what happens is that the spouse comes later when the conference is done, and they just spend that extra week, right? But that extra week is not deductible. Now the return ticket that maybe the owner of the business spends to that return ticket, the boss spent the money they spent to buy the return ticket, the cost of the return ticket, I would say, the return ticket for the owner of the business or the person going for the conference, tax deductible. Okay, so hope everybody understands that. So yeah, go ahead. I'm not saying that you should not have vacation in any way you want to go, but for it to be deductible, it has to be for a business purpose. All right, it has to be for a business purpose. Awesome. All right. So I think we do have one more question. I think this actually is very similar to I think the first question. So this question says, can I list my personal for business use? You can, but it has to be fair market value. Listing must be fair market value. But I want to ask this, I get this because I'm not asking anybody here right now. But when why I'm still wondering, is there a reason why the person is leasing the personal asset for business use? Because I believe I mentioned this before. If the asset is actually for business use, I would prefer you putting the asset in the name of the business, right? And if you have, let's say you have a vehicle that is for business, fully for the business, because if anything happens, right? If anything happens, of course, if the asset is still owned by you, let's say there's anything happened like an accident, you want to make sure that the business covers that. You don't want them to come out to sue you. We have LLCs, we have corporations is to protect ourselves, right? Separate ourselves from the business. So we don't want to act in a way that assets belong to us, but are used for the business. You want to protect yourself. You want to protect your business, your property. All right. So yes, you can list your personal assets for business use, but make sure that should I say, confirm that that's the best way, right? When I speak here, it's only for educational purposes only. But just confirm that that's the best way to go because it depends on the circumstances that surround that, but you can, of course, make sure it's fair market value. But again, it's very important for you to dig deeper to say, okay, is it, do I transfer these assets to me, to my business, or leave it in my name? I would not say you should leave it if your business is using the asset 100%, right? So, reasons for that. But again, consult with some tax practitioner, an accountant, CPA, attorney that will really dig into and understand why in that, protect yourself. All right. All right. So thank you for joining me today. I think we had a wonderful time. I'm glad I was able to, share today. Remember, you have to be intentional. I could share all day long, but to make sure your business thrives, you have to be intentional. All right. So bye for now. Of course, you need to contact or share anything that's happened within your business. You know how to definitely me on my website. The website is Dr. Ini, that's drinia.com. All right. Right. Bye for now.